Never ever buy a brand new building or a new construction building. Hi there, my name is Jeff, and today I'm going to give you 5 reasons why you should never ever buy a new construction or a new built building. And reasons is very simple. I know you might say, Jeff, listen, it's a brand new building. The reality is most investors think that just because it's brand new, it has all the bells and whistles, it looks great, the paintings, the fittings, the finishings, everything looks great, means I'm going to live in it happily ever after. But in reality, have you gone under the hood to see what this new building is all about? Now, I'm going to give you 5 core reasons why most savvy investors who are successful in the real estate space do not buy a brand new building. Now, number one is you're buying at a premium. Get this right. There is no investment anywhere in the world that you buy high and sell low and make a profit. Already you're going into this being burnt already from the onset. And it's so clear because most brand new properties are sold at a premium. Why? Because the builders want to make their money as quickly as possible. Remember, we live in a microwave mentality environment. And so they want to make as much profit as quickly as they can do and get away from that property itself. So you coming in as an investor, you are buying it at the top peak of the market. There is no way on the planet you are going to make a profit incidentally from holding that property. And again, one of the key metrics we use is for us as an investor is buying below replacement cost. Now, what is replacement cost? Replacement cost is you buying a property below the cost to build a brand new of similar or a likely property of the same range. So if you buy a property or you buy a brand new building that's already at its peak, you're already at replacement or above replacement cost. And so getting those gold mines or those gems, you're not buying a gem, you're just buying a landmine, technically speaking, because you're buying already at a peak. And so over the years, which will lead to number 2 reasons why you should not buy a property or a brand new building is because depreciation and resale value. So why is very key for us as key investors when we look at the real estate market, our key metric number 1 is the price. If the price doesn't make sense, if the price is above the board, if the price is at a premium, then you're going in already losing. You're going into the battle already losing already from the onset. And so it does not make economic sense. It does not make financial sense. It doesn't make an investor sense to go into a brand new property and just go and make that purchase. That's number 1. Now, number 2 is the property taxes. You see, lenders value your property taxes based on assessed value. Because you're buying a brand new property, there is nothing to access besides the land, the land value. And so based on that, you see most investors who go into buying brand new properties, for the very first year, their property taxes is low, and they think, oh well, this is I'm in paradise right now. This must be Christmas came early, but that's not the reality. The reality on the ground is after subsequent years down the line, the property will be reassessed, and so based on that new reassessed value, you will have a higher property tax to deal with. Now, in North Carolina, where I am right now, based on some counties, right now in my county, we are doing, which is Mecklenburg County, we're doing about 0.733% per 100 of assessed value. And so let me put it in perspective. For a property worth about $300,000, you'll be paying anywhere from $2,220 per year on your property taxes alone. So you got to look at the numbers. So if you go and buy a brand new property where the taxes are pretty low for the first year, you're looking at almost doubling that second or third year based on the new reassessed value of the property itself. So you will see yourself getting sold in on a low entry fee. That's besides your mortgage, PMIs, and all of those other costs. So you're going in on the first year thinking you're getting a gold mine, only to realize that you're buying a property that you'll be faced with a lot of monthly payments over down the lines. Now, number 3 reasons why we would never recommend you buying a brand new property has to do with the quality of the construction material itself being utilized. You see, a lot of investors or Wall Street investors with a lot of big pockets go into these neighborhoods and they put in too much money and they want quick turnover. And so what you see builders do is, because of that rush to get it to market at a faster pace, they put quality. Quality becomes it's no longer their interest anymore. but instead quantity is what they go after. And so you see completely built buildings, brand new in 2025, having ridiculous issues when it comes to inspection. And so you as a buyer, if you find yourself buying a brand new property before watching this video, you have the option of doing a proper inspection. A phase one, likely it might go to a phase two, but a phase one inspection has to be done. Why? Because just because they say it's brand new and it's newly built does not guarantee that the quality of the materials, or you're not going to run into issues. I've seen in my experience over the years, several investors who buy into brand new properties like this get themselves burnt. Issues that had to do with foundation, structural damage. So a lot of these things you want to look out for. Even the roof, even as a brand new, sometimes you have issues with the roof itself. And of course, other ancillary costs or issues might crop up to an investor. And so you want to make sure you perform an inspection on that property. Yes, it's going to cost you out of pocket initially, but you see, you're saving in the long term. Look, always be smart. Be dollar-wise, penny foolish. So you want to be smart. You want to understand the process. You want to understand the long-term goal of your investment. Listen, when it comes to investing in real estate, it's not just your emotions. You don't buy based on emotions. You buy based on logic. You buy based on facts. You buy based on the realization that I'm in need to make a profit. I'm in need to triple, quadruple my investments. So you're not just in it like everyone else. Everyone else will just buy a regular property and get themselves burnt, locked in for a 30-year mortgage, which they see themselves locked in for life. But you must be different, and then you must play the market differently. Now, the fourth reason why we would never recommend our investors buy a brand new building or a brand new property has to do with resale value. Listen, you already bought at a peak. You cannot resale at a premium beyond or below or above what you purchased. Yes, you have to understand market cycles, and that's why every cycle is different. There are 4 key cycles in the market. You have to understand what those cycles are and how they impact you, because right now you're already a buyer, so you're not transcending from a buyer to a seller. So you have to understand what those 4 market cycles are. From the recovery phase, you have the recession phase, you have the hyper supply phase. You have to understand what those phases mean for a seller, because at this level you're no longer a buyer, you're now a seller. And so resale value, something you bought at the peak, will be almost ridiculously impossible to make a large amount of profit from that property. And again, built-in equity is already almost gone because of the fact that you're buying something at the peak. And so if you look at, say, 4 or 5 years down the line, and let's say the home builders, for example, are forced into entering a buyer's market. Now, because of that, they are forced into reducing price to sell their property, their brand new buildings that they built. So what will investors do? Will they come and buy your property that is a few years old, or they will go and buy those brand new buildings sold at a discount lower than your own price, which makes sense. So if your property right now, say 4 or 5 years down the line that you bought at, say, $400,000, and your intention is to make at least $100,000 margin to the upside, and then you list it for $500,000. Meanwhile, those same property, similar likes, brand new, is being sold for $300 or even $280. What will investors do? Will they come and buy yours for $400, or they'll go buy yours for $300? So that's the difference. You have to understand that the resale value of a property you bought at the peak is almost negligible, because you're already buying to make a loss and not a profit. Now, the final reason, the fifth reason, which we recommend not buying a brand new property, is the level of uncertainty. You see, I see a lot of investors go, I almost fell into this trap myself, going into buying something that is still being built, and then you never know when it will be completed. Why? Because the builders can come to you and let you know that, listen, we run into issues. Life happens, yes. There might not be any transformers. You might move into your property, there's no light. There might be issues. And so you want to buy a property that you know right from the onset, your get-go, you know what you're doing. However, I'm going to leave with you the only condition we go into buying a brand new, if it meets our criteria, will be this. The only reason why we'll go and buy a brand new, if the builder is distressed and the builder is in real trouble and they begin to slash price to the point where we see that they are motivated. And so if I'm going to buy a brand new building that is double digits, I repeat, double digit price per foot, absolutely I'm going to buy that, because it's a brand new property. And then what the builder is doing is that, because there's no interest, the price begins to drop. So if the price drops below replacement cost, see, the criteria is you want to buy below replacement cost. If it's brand new, or if it has built-in equity or has value in the property, you'll buy it. So if the builder sells this property or lists it below replacement cost, it's now an incentive, because price is my major barometer or my matrix. So if the price makes sense, if the price per foot is almost double digit or almost within a range that we think is acceptable or below replacement cost, then of course we'll be interested in that property. I hope this makes sense. So if you have any questions on this, make sure to connect with me. You can leave a comment below this video and then we'll respond to that. Don't forget, make sure to register for our free web class. We'll be covering how we find gold mines in minutes, while helping you to avoid all the landmines and preventing you from having all the headache and stress that a lot of investors get locked into over the years, and they see themselves burnt just because they bought a brand new property. I hope you find this exciting. Until next time, thanks for watching and stay blessed.